right. So it's Wednesday, March 26th, 2025. It's 3:30 p.m. Indian Standard Time as we're wrapping up. Welcome to the Finwell Daily Brief, everybody. This is our 8th briefing, and we're going to unpack the last few minutes of what happened in the market today. It's like some days the market's like thumbs up, thumbs down, but today I feel like it's a little bit of a shrug.
Yeah.
We saw some pretty big moves, and then some things didn't move at all. And that's kind of what we're going to explore, right? It's like, why are some things moving and some things aren't?
Or really have talk, though, can hit the nail on the head there, Those mixed signals, that's where the story really is. That's where you, the listener, can really understand, well, why is this part of the market reacting this way? And why is this part of the market not reacting at all?
Yeah, that's super interesting. So let's start with the numbers, all right? Let's dive into those signals.
Yeah.
So the Nifty 50, it's kind of considered the heartbeat of the Indian economy, right?
Right.
But it took a bit of a hit today, didn't it?
It did.
Closed down 181.80 points. That's 0.77%. To finish at 23,486.85. What's your take on that?
A drop like that in the Nifty 50, it usually signals that, there's a lot of caution among the bigger companies.
Yeah.
These are the companies that are really, kind of driving the market to a certain extent. And it makes people nervous when they see those big movers start to drop a bit.
Yeah. It's like if the captain of the ship is like,
Exactly.
Everyone's going to be like, wait, what?
Exactly.
So then you look at the Nifty Midcap 150, and it also went down, but it was a gentler decline. It was down 121.70 points, 0.63%. So still going down, but not as dramatic. What do you think's going on there?
Well, mid-caps, their story tends to be a little bit more tied to the domestic story, the Indian domestic story, and they might not be as susceptible to global headwinds, as the larger multinational companies, which make up, a larger part of the Nifty 50.
Right.
So that moderate decline, it still suggests that there's some confidence in India's own internal growth.
Right. Okay. Now, this is where I think things get kind of interesting. So the Nifty Small Cap 250 didn't move. It stayed flat, 15,184.45. And then the Nifty Total Market Index, which is that's kind of the whole enchilada, right? That's everything.
Yeah, the big picture.
Also flat. It closed at 12,046.40.
Yeah.
It's like the little guys are just chilling while the big boys are like, whoa, wait a minute. What does that tell you?
Well, it could be a sign that the overall market, the underlying engine still has some momentum, right? While those bigger stocks, the ones that are more sensitive to the global picture, maybe they're seeing some selling pressure, but the mid caps and the small caps, it seems like there's still interest in those.
Yeah.
Maybe even some optimism. It's like you've got these big tankers out there, and then they're feeling the rough seas.
Right.
But you got the little boats that are just kind of, bobbing along.
Like whatever, dude.
Exactly. You know, and they're more connected to maybe those local currents and those winds, which are still favorable.
That's a good analogy. So, okay, the 10-year bond yield stayed the same today, 6.63%. So for people who are listening who are like, okay, so the market went down, bonds, what's the story there? What does that tell us?
Well, a stable bond yield, when you have, some volatility in equities, it can tell us a couple of things. For one, it could mean that people aren't necessarily panicking. They're not running, to the safety of government bonds, which is what typically happens, right?
Right.
When people get nervous, they go to bonds. And then another thing it could suggest is that, market expectations around things like future interest rates or even inflation haven't really changed much. Based on what happened in the equity market today, it's like, maybe there's a little bit of, a storm out there, but the overall temperature is still the same.
Right. Okay, and then just to finish out our little snapshot of what happened today, the rupee, or the NRUSD exchange rate, closed at 85.64 per US dollar. So it's a little bit stronger than it was yesterday.
Yeah.
Which is interesting because the stock market went down, but the rupee's like, I'm okay.
Exactly. And a stronger rupee can be influenced by a lot of things.
Right.
It could be continued investment from foreign investors or, maybe even a little bit of a weakening in the U.S. dollar itself. So there's a lot of factors that play into that.
Right. So that's the lay of the land in terms of the numbers. But what about the actual news, right? Like what's going on that's driving these numbers? Well, it seems like that drop in the Nifty 50, that 0.77%, that seems to be kind of related to something that might be happening over in the U.S., huh?
Yeah, a lot of eyes in the market are on this upcoming U.S. tariff decision, which is expected, I think, around April 2nd. So there's a lot of kind of preemptive anxiety, I think, that's going around about, what these tariffs might mean for India, especially in terms of exports.
Right.
Because, think about it. If we get hit with tariffs on goods that we send to the U.S., that could really affect, the bottom line for a lot of Indian companies.
Yeah.
And that uncertainty, that's the thing that makes investors nervous. And that's probably why, those bigger export-oriented companies, the ones that make up the Nifty 50, that's probably why they're feeling the pressure.
Right. And nobody likes uncertainty, right? That's the thing. So then you've got, even with all this worry and stuff, the rupee still did pretty well today. What's keeping it stable?
Well, it's a bit of a tug of war, On the one hand, you've got these foreign portfolio investors, and they're still putting money into India, and that obviously helps the rupee.
Right.
But then on the other hand, there's just a lot of kind of caution in the air globally, because everybody's waiting to see what's going to happen with these economic data releases from the U.S., These are the numbers that kind of give us a health check, so to speak, on the global economy.
Right.
So the rupee is kind of caught in the middle.
So then the other big news of the day was crude oil prices. They jumped up quite a bit. Brent crude went up 1.2% to $84.30 a barrel. And it seems like the reason for that is that OPEC Plus, which is the Organization of the Petroleum Exporting Countries, plus their allies, they're signaling more production cuts. What kind of impact does that have on India? We're a pretty big importer of oil, right?
Yeah, absolutely. And, when crude oil prices go up, it can create a lot of ripples in the Indian economy because, first of all, it means that our import bill goes up, right, which can lead to a bigger trade deficit. And then that can lead to higher prices at the pump for regular people like you and me.
Right.
But it also means higher costs for businesses, for transportation, and all of that can eventually, feed into broader inflation.
Right.
So it's not a great thing for those sectors. But there is a flip side to it. If India has some domestic crude oil production, then those companies, well, they could see a boost in their revenues.
Right. So it's good for some and bad for others.
Yeah, exactly.
Okay, the IT sector. So Indian tech stocks went down today. It was part of a global tech sell-off. I think you mentioned that Infosys and TCS saw intraday drops of over 2%. So what's the reason for that?
Well, a lot of it has to do with what's happening globally.
Right.
We've seen some weakness in major tech markets, places like the NASDAQ, for example. And that sentiment tends to have a ripple effect on Indian IT companies because a lot of them, they have significant operations overseas, right?
Right.
And they get a lot of their revenue from places like the U.S. So when tech sentiment globally kind of takes a dip, it tends to drag down those stock prices here.
Right. So even though they're Indian companies, they're really affected by what's happening globally.
Absolutely.
And then finally, gold. Gold imports surged 15% year on year in February of 2025. What's driving that?
Yeah, there's probably a couple of key factors at play there. So February, it's wedding season in India, right? And gold is, a huge part of those celebrations.
Right.
So, that always drives up demand for gold. And then also the rupee has been, a little bit weaker lately.
Right.
So that makes importing gold more expensive in rupee terms, Even if the actual amount of gold being imported hasn't gone up by 15%, the value in rupees would still be higher.
Right. Because you got to pay more rupees to get the same amount of gold.
Exactly.
Okay. So we've looked at the numbers, we've looked at the news. So now let's try to kind of put it all together.
Right.
Like, why did the market pull back today? What's the big picture here?
Yeah, a lot of it just boils down to uncertainty, right? Yeah. These global uncertainties that we talked about, the U.S. tariffs being a big one, that's making investors, a little bit more cautious.
Right.
And then also, after a while, after the market's gone up for a bit, it's natural for investors to start taking some profits.
Why?
They want to lock in some gains.
Right. So just focusing on equity market sentiment, you mentioned that the banking and IT sectors were kind of leading the way down in the large cap space. So why those two sectors?
Well, I think with the banks, they've actually done pretty well lately.
Right.
And so today might just be a case of investors deciding, okay, I've made some money. I'm going to cash out a little bit, even though, their upcoming quarterly earnings are probably going to be good. People are still just taking profits.
Right.
And then with IT, well, we already talked about the global weakness in the sector. But there might also be, some underlying concerns about, future growth prospects given the current global economic picture. So investors might just be reassessing things a little bit.
Right. Right. So it's interesting that, the big players in banking and IT, they saw a dip, but then the mid caps and small caps, they held up pretty well. So what does that tell us about where investors might be seeing opportunities right now?
Well, I think it suggests that investors are still seeing value in those companies that are more focused on the domestic Indian economy,
Right.
more domestically focused,
Right.
So while they might be getting a little bit, cautious about the bigger, more global names, they still believe in the India growth story.
Right. Right. And that's playing out in the mid caps and small caps.
Exactly.
Yeah, the currency and bond markets.
Yeah.
The rupee stayed strong. The bond yield was flat. Everything's, pretty stable
Yeah.
in the midst of all this equity market movement.
Yeah, exactly. And I think that stability in the ANR-USD exchange rate, that tells us that, right now, the supply and demand for both currencies is pretty balanced.
Yeah.
You've got those foreign investments coming in that's supporting the rupee, but then the global uncertainty is kind of preventing it from really strengthening. And then that bond yield, that steady bond yield at 6.63%, that's a sign that the market is just kind of waiting to see what the RBI, the Reserve Bank of India, is going to do next.
Right.
Because with inflation kind of leveling off, everybody wants to know, is the RBI going to cut interest rates?
Right. So for all the listeners out there who are trying to figure out what to do with their money, what are some of the key sectors that they should be watching right now?
Well, let's see. In the banking and finance sector, even though there might be some short-term profit-taking going on, the overall outlook is still pretty positive because, everybody's expecting good quarterly earnings. But, just keep in mind that there could be some bumps along the way. And then with IT, the global headwinds are definitely creating some pressure. But, in the long term, Indian IT companies, they have strong fundamentals.
Right.
They're really well established globally. So I think they're still a good bet for the long haul. And then finally, energy and commodities. With oil prices going up, it's kind of a mixed bag.
Right.
It could be tough for companies that use a lot of oil, but it could be good for domestic energy producers. So that's a sector where, you could see some winners and losers.
Right. Okay, so given all of this, like if a listener's like, okay, what should I be thinking about right now? What are the big things to watch? What are your thoughts on that?
Okay, well, I think first and foremost, keep an eye on those U.S. trade policies. What happens with those tariffs? Because that could really impact, certain sectors in India, like textiles and the auto industry.
Right.
So that's a big one. And then watch what the RBI does. With inflation stabilizing, if they decide to cut interest rates, that could really give the market a boost.
Right.
And then finally, I think the government's focus on infrastructure development and the Make in India initiative, that's all about boosting domestic manufacturing. So in the long term, those are really good areas to keep an eye on.
Right. So bottom line, today, the market dipped.
It did.
And it seems like the main reasons were global trade uncertainties and some pressure on specific sectors, which we talked about.
Right.
But, it's important to remember that there's still foreign investment flowing into India, and the domestic economy is still doing pretty well.
Absolutely.
So the fundamentals are good.
Right.
I think the biggest takeaway is stay diversified.
Right.
Don't panic over these short-term movements.
Exactly.
Stay focused on the long term.
And don't make any rash decisions based on, what happened today or yesterday. It's all about, the long game.
Exactly. All right, so that's the Finwell Daily Brief for today. Hopefully this was helpful.
Absolutely.
If you want to hear more of these briefings, make sure you subscribe.
And please do connect with us on LinkedIn. We're SOS Finwell on LinkedIn.
You can reach out to us there if you have any questions or if you want to talk about any of this in more detail.
We love hearing from you.
So with that, we will leave you with a quote from Benjamin Franklin. An investment in knowledge pays the best interest. Thanks for listening, everybody.